Hi, Tim Nesbitt, Audit Technical Director at Pitcher Partners. Today I'm here to talk to you about the long-form audit report, which is going to have a huge impact on our listed clients. The long-form audit report will increase transparency and increase the level of communication between the auditor and those charged with governance. While the audit report will continue to be on the financial report as a whole, the new long-form report will contain a number of new sections. Firstly, key audit matters, sometimes referred to as CAMs. Secondly, other information. Thirdly, if you have a material uncertainty, there will be a separate section. And lastly, for those charged with governance and the auditor's responsibilities on ethics and independence, there will be separate sections clarifying those roles. So what is a CAM? A CAM is that item of most significance to the audit. CAMs are a subset of the information communicated to those charged with governance and the significant audit risks. A key point to note, a key audit matter is not a substitute for a modified audit report. So what can you expect to see in a key audit matter? Firstly, there will be a reference to the financial statements. Secondly, there will be a description of why the matter is a key audit matter. And thirdly, there will be a description of how the auditor has responded to this key audit matter. CAMs range from half to 1 page based on previous experience in the UK, where they've been operating with a similar standard for the last 2 years. How many CAMs will you expect to see in a Pitcher Partners audit report? Well, at Pitcher Partners, we haven't set a minimum or a maximum because we rely on the professional judgment of our partners and staff to come up with the appropriate number. However, experience in the UK indicates that between 2 and 8 is most common, and the auditing standard suggests that a listed company will not have less than 1. So what is the impact of key audit matters on the audit process? Firstly, there'll be an increased level of communication. Secondly, it will take more time to prepare and review the audit report, both from those charged with governance and from the audit team's perspective. Other information that I mentioned earlier, whilst there's no change in the responsibilities of the auditor in that they do not have to audit the other information included in your annual report, they are required in the audit report now to make a statement that that information is not materially different from that which you have included in the audit report. The impact of including other information in the audit report is that your annual report information will need to be prepared much earlier than in previous years, and you will need to consult with your auditor and provide them with sufficient time in order to review this information. Material uncertainty. If there is a material uncertainty about going concern, then there is a separate standalone section in the revised long-form audit report. And lastly, as I mentioned, there is additional sections on auditor ethics and independence and the responsibilities of those charged with governance. To recap, there will be increased communication between the auditor and those charged with governance. There will be an increased amount of time for the auditor to review the information and the audit report. And lastly, you may require additional time to review and consider the audit report prior to its release. So, considerations going forwards. Is there sufficient time for the auditor to review the information? Is there sufficient time for you to review the information? And do you need to consider putting out additional communications to the public about items which may be disclosed as key audit matters? Or do you need to include additional disclosure in your financial report or annual report? If you have any further questions, please contact your team at Pitcher Partners.